Hey, what's going on and welcome back. I'm Travis with JT Wealth, and in today's video we are going to talk about the stimulus check which is finally approved and 9 undervalued growth stocks that you should have in your portfolio for 2021. So welcome back, and if you're new here, thanks for checking out the channel. Let's get right into what we're going to talk about in today's video. Alright, so the topics for today's video are the third stimulus check being official, where Bank of America expects to see that money go. There's a really cool graph based on where the money's gone in the past, some investment moves to make based on that, and 9 undervalued growth stocks for 2021. Alright guys, but before we get into all that, this is your friendly reminder to please give a thumbs up to the video if you liked it, leave a comment down below if you have any recommendations on how we can improve the channel. Also, for everybody who started watching the channel or is watching right now in anticipation of seeing Julie, don't forget you can see Julie as well on the TipRanks YouTube channel, Monday through Friday pre-market with her videos there, as well as some videos she's releasing in the afternoon. And lastly, if you're looking to get a new brokerage account, please check out the link down below to the Webull account, where you can get 2 free stocks for signing up and funding your new investment account. So all that being said, let's get right into the CNN article I found earlier regarding the stimulus, the numbers that you can expect, and when you can expect to see that money. Alright, so here it is guys, straight from CNN Politics. Today at 4:12 Eastern Time, stimulus payments will start going out this weekend. Of course, the people who will receive their stimulus checks first are those who have had direct deposit placement for the last 2 stimulus checks. So if you received your checks in that manner in the past, you can expect to get the third stimulus check, assuming you meet the criteria of AGI, in the same manner and as soon as possible. Now regarding those income limits for this third stimulus check, if you're a single taxpayer, the full $1,400 per person will be paid out to you if your AGI is less than $75,000. You will not be eligible for the check if your AGI exceeds $80,000. As a head of household, you're allowed up to $112,500, but will be excluded if you exceed $120,000. If you're a married couple filing jointly, you'll be expected to make less than $150,000 to receive the full $1,400 stimulus check per person, but if you exceed $160,000, you will not be eligible for those checks. So whether you're one of the lucky ones to receive $1,400, a couple receiving $2,800, or perhaps even more for having children, where is that money going to go? Well, this Market Watch article gives you an idea. And in this article, author Steve Goldstein writes, the stimulus money isn't going to be spent. So here are the investment moves to make. So this new stimulus money is big talks in the politics world, but also in the financial markets, with a lot of hoopla over whether or not the stimulus is going to overheat the markets. Here you can see Bank of America's Research Investment Committee says it won't, and it brings some new data to the table. First, it cited data from the Census Bureau showing that of the households who received a $600 stimulus check in the first half of February, 73% saved it or paid down debt with it. Consumer credit also unexpectedly fell in January. So if 73% of the people that received the second stimulus check didn't spend it, what's the expectation for what will happen with the third stimulus? In Exhibit 9, you can see every household income group plans to save much more than normal, with 79% of high-income people saying they won't spend the stimulus, and 53% of the lowest income earners still not spending the stimulus money. You can see how much they'll save, how much debt they're going to pay off, whether or not they're going to invest it, use it for housing, food, clothing, and necessities, or perhaps vacation and travel. Now, while I love seeing people paying down debt, I'm a little surprised to see some of those in the higher income categories saving so much of their money and investing so little. But it does seem that that trend exists across the board in all of the income brackets. So what does that mean for investors? Bank of America says don't count on anything more than a temporary inflation rebound. For stocks specifically, it says buy small cap growth stocks when they dip and the NASDAQ composite. Financials are its favorite sector since it can win in either way. If Bank of America's inflation analysis is wrong, banks would benefit from a steeper yield curve and more housing and loan activity. If it is right, banks would be attractive given higher stock buybacks and attractive yields. Of course, take it for what it's worth when a bank tells you that financials are its favorite sector. So outside of Bank of America's advice, how else can we best utilize this stimulus check going forward into 2021? Well, this US News article put out 9 growth stocks that are undervalued. Now, for everybody who says they would much rather watch Julie than me, I get it. I don't want to look at this either. But in this next section, I'm going to give you guys a lot of articles, and you're just going to hear my voice, so bear with me. Author Wayne Duggan says that interest rates have been at historically low levels for most of the past decade, and growth stocks have led the stock market charge to all-time highs. However, most analysts and investors believe the valuations of some of these highest-flying growth stocks have become stretched at this point, limiting additional upside in the near term. Some investors are even concerned that the market may be experiencing a growth stock bubble. Fortunately for growth investors, there's still a handful of value plays among growth stocks in 2021. Here are 9 undervalued growth stocks that analysts recommend. Now guys, the highest of these 9 stocks has a 31% potential upside for 2021. So given that the SPY is usually around 10% a year, that's not pocket change. So let's start off the group with Advanced Auto Parts, ticker AAP. Here you can see the TipRanks stock analysis for AAP with an average target of 178.57 and a modest 2.84% increase for the coming 12 months. But you can see a high of $199. BOA analyst Elizabeth Suzuki says do-it-yourself auto parts spending trends are still strong in early 2021, and the next round of government stimulus payments could be a significant tailwind. She says Advanced Auto Parts' relatively high exposure to professional auto services will help insulate the company from difficult year-over-year do-it-yourself comparisons in April and beyond. While the do-it-yourself business plateaus, Suzuki says Advance's professional business should rebound as more drivers start to return to the road in the first half of 2021. Bank of America has a buy rating and a $185 price target for the AAP stock. So Bank of America falls kind of in the middle there between that 178 and 199 high that you saw on the TipRanks chart. Our next stock is Cigna Corp, ticker CI, with an average price target of $266 for an 11.25% increase over the next 12 months, a high target of $290. Cigna is one of the largest U.S. managed care organizations and pharmacy benefit managers. Morningstar analyst Julie Oderbach says Cigna is a compelling value priced at just 10.4 times forward earnings and 0.5 times sales. Cigna reported 9.1% revenue growth and 323% net income growth last quarter. And now on to the anticipated top performer with a 31% projected upside for 2021. And that is Amazon, ticker AMZN, with a $4,102.52 projected price target over the next 12 months, giving them a 31.76% increase. Although notice the high target on this is $5,200. Now, before everybody freaks out and says Amazon is too expensive, please remember fractional shares are a thing, and a 31% growth on your $100 or $1,000 is still better than whatever the growth would be on that same dollar value in the SPY. Amazon has been one of the best performing growth stocks of all time, but Bank of America analyst Justin Post says the stock is still undervalued. Post says investors should anticipate a deceleration in growth this year as Amazon laps the beginning of the health crisis. However, Amazon's results in recent quarters demonstrated just how powerful and profitable its online retail, cloud services, and advertising businesses can be in the long term. Post says Amazon Web Services revenue growth could get a boost from a rebound in IT spending. Bank of America has a $41.50 price target on Amazon stock, which is just above the average. Moving on, we have Dexcom, ticker DXCM, with a $458.43 average price target over the next 12 months, with a just shy of 25% increase. Dexcom is a medical device company that produces glucose monitoring systems for people with diabetes. Bank of America analyst Bob Hopkins says Dexcom is a leader in one of the largest and most defensible markets in the medical technology space. The company reported 23% revenue growth and 283% net income growth in the fourth quarter, but has said it plans to ramp up its investments in 2021. Those investments may weigh on margins in the near term, but Hopkins says they should pay off for growth investors in the long term. Bank of America again coming in with a $500 price target for this stock, about $50 above the average. Next on our list is Vertex Pharmaceuticals with a $276.08 average, which is a 28.32% increase over the next 12 months. Vertex Pharmaceuticals develops therapeutics for treating cystic fibrosis, inflammation, and other conditions. Morningstar analyst Karen Anderson says Vertex will maintain its dominant position in the cystic fibrosis market and rely largely on other pipeline drug candidates to drive its long-term growth. That promising pipeline includes candidates such as CTX-001 for beta thalassemia and sickle cell disease, VX-864 for alpha-1 antitrypsin deficiency and VX147 for APOL1 mediated kidney disease. Vertex reported 15% revenue growth in the most recent quarter, yet its stock trades at just 16.5 times forward earnings. Next on the list is a stock I feel strongly about, not for its political reasons, but for its earnings potential. And that stock is Facebook, ticker FB, with a $341.13 estimated price target over the next 12 months, giving it 24.55% increase. Quarter after quarter, social media giant Facebook continues to put up impressive growth numbers, including 33% revenue growth and 53% net income growth in the most recent quarter. Yet despite its staggering growth, Facebook shares are still attractively valued at just 19.7 times forward earnings and 8.6 times sales. Post says shopping is the most important product initiative for Facebook in 2021. In February, Shopify announced it is expanding its Shop Pay payment option to all Facebook and Instagram users. Bank of America again coming in with a buy rating at $358 for this stock, slightly over the average for 12 months. Next on our stock list is Google, or Alphabet, Class A stock, ticker GOOGL, coming in at $2,338.80 for an 11.34% increase over the next 12 months. Like Facebook, Google's parent Alphabet continues to put up consistent growth numbers, including 23% revenue growth and 43% net income growth in the most recent quarter. Fortunately, it's still attractively valued as well, priced at just 25 times forward earnings and 7.3 times sales. Post says Alphabet has a number of bullish catalysts in 2021, including accelerating search growth, Google Cloud customer wins, YouTube shopping opportunities, and progress from Waymo, Calico, and YouTube. Post says long-term investors shouldn't sweat regulatory crackdowns. Bank of America again coming in for a buy with a $24.40 average price target at about $102 over the average. Alright guys, moving on, we have Centene, ticker CNC, with a much more affordable $76.54 average price target over the next 12 months, looking at a rough 23.67% increase from its current share price of $61.89. Now, Centene is a healthcare plan provider specializing in Medicaid, military, and Affordable Care Act marketplace plans. They reported 50% revenue growth in the most recent quarter, but the stock trades at just 10.5 times forward earnings and 0.3 times sales. In addition to the company's solid organic revenue growth, Centene also made a $17 billion acquisition of WellCare in 2020. Utterback is bullish on the WellCare deal because Medicare Advantage is one of the most attractive growth opportunities in the entire health insurance space. Morningstar analysts come in with their buy rating of $85, which is over $10 over the average on this stock. Alright, our ninth and final stock for you guys is Marathon Petroleum Corporation. And this stock comes in with a 61.56% average price target over the next 12 months, a modest 6.14% increase. The oil industry hasn't provided many growth stocks in recent years. However, Bank of America analyst Doug Leggett projects 34% revenue growth and 34.5% growth in earnings before interest, taxes, depreciation, and amortization for refiner Marathon Petroleum in 2021. Marathon shares trade at 21 times forward earnings and 0.5 times sales. Leggett says Marathon trades at a deep discount to the value of the sum of its parts. The company's Speedway sale will also provide opportunity for a large share buyback. Bank of America again coming in with about a $10 over the average price target here for $70 per share after 12 months. So guys, even if you theoretically invested in fractional shares in Amazon for a couple that made $2,800 of stimulus money and invested that in Amazon for the next year, if you received that 31% growth, you would come up with $868 extra after a 12-month period. In essence, giving yourself more than the last stimulus did because it provided $600. Bottom line, guys, I just want to see you all make more money with the money the government's going to give you. Whether it's with some of these stocks we talked about today, some of the stocks you find on your own, whatever the case may be, go out and make some money, make some smart decisions with the money that you're going to get, pay off debt if you have to, invest the rest. Just make sure at the end of the year you got something to show for what you invested in. So that's it, guys. We talked about the third stimulus check being official. We talked about Bank of America and what they expect that money to do. We talked about the investment moves they recommended in the financial sector and the 9 undervalued growth stocks that you can invest in for 2021. So let me know what you guys think about those stocks. And remember, these aren't my picks. This is me providing financial news to you guys that came out today. And of course, the end of the video, friendly disclaimer, I am not a financial services employee anymore. I'm not your stockbroker. I am not in a position to provide you with stock information. I'm not responsible for what you do with your money. These videos are for educational and entertainment purposes only, and I hope you find some value in them before going out, doing your own due diligence, and determining how you are going to best invest your money. Now, maybe here in the near future, we'll go through a video on what exactly it is I do, because I don't work in finance anymore. But until then, hope you guys enjoyed the video. Please leave a thumbs up, comment down below, and bottoms up.